Welcome to Finance Deep Dive. Have you ever looked at the stock market and just thought, what is actually going on there? Well, it can seem really complex, but the basic idea is actually pretty simple. In this video, we're going to break it all down.
All right, so let's start with the absolute basics. What even is a stock? Think of a company like a giant pizza. A single stock, or a share, is just one slice of that pizza.
That's right. When you buy a stock, you literally own a tiny, tiny piece of that actual business. You become a part owner. So, if a massive company like Apple has millions of shares out there and you buy just one, congratulations. You're officially a part owner of Apple. Pretty cool, right?
So, where do all these little pieces of companies get bought and sold? Well, it all happens in a huge marketplace. Let's get into how that works. Okay, so it all starts because companies need money. They need cash to build new factories, hire people, and just grow.
And one of the main ways they've raised that money is by selling off those little slices of ownership, those shares, to people like us. And that very first time a company offers its shares to the public, that's a really big deal. It's called an IPO, which stands for Initial Public Offering. So investors jump in, they buy up those shares, and boom, the company gets a huge injection of cash to fund its big plans.
But see, the IPO is just the beginning. After that day, those shares are traded between investors every single day. And all this trading happens on these organized marketplaces called stock exchanges. You've probably heard of the big ones like the NYSE and the Nasdaq.
Now, here's where it gets really dynamic. The price of a share isn't static. It's moving all the time, up and down. So why do they move? Well, it could be anything. How well the company's doing, how many people want to buy the stock, even what's happening in the news or the overall economy.
All right, let's get to the question everyone wants to know. How do you actually make money with this stuff? Let's walk through the payoff.
So let's imagine you find a company you really believe in, and you buy one share.
For, say, $100 odd. Now, let's say the company does really well. Lots of other people want in, and that demand pushes the price of your share up to $120.
If you decide to sell your share at that new, higher price,
you've just made a $20 profit. Simple as that. That profit you make from selling is called a capital gain. That's way number one. The second way is through dividends. That's when a company is doing so well, it decides to share some of its profits directly with its owners. That's you, the shareholder.
So that kind of leaves you with a really interesting thought, doesn't it? If every stock is a piece of a business, just think about all the products and services you use every single day. What are you already owning a piece of?
If you are liking the content, don't forget to subscribe. It motivates us to keep posting. Thanks for watching.